what if you don't qualify for investing into a Roth IRA? Well, don't worry, there's still options available to help you place money into a Roth IRA even if you're over the income limits. Now let's explore how you can take advantage of this opportunity. But first, let's dive into some government spending. Now, what's on the horizon here and how could it impact your financial future? That's exactly what we have been worrying about all along with respect to not only the elections, but going forward. And it can depend on a couple of key factors. And the Roth IRA is a big part of maybe even avoiding some of those taxation issues in the future. Now, why I say this? From 1960 all the way through about 2008, the US debt to GDP ratio maintained some discipline and it fluctuated between 23 and 43%. Now, it wasn't until Goldman Sachs' Paulson and then Federal Reserve Chairman Ben Bernanke pressed the print button and we saw a dramatic shift in the debt, and it skyrocketed from 39% all the way to an eye-watering 97% of our GDP. So what awaits us next? Well, projections from Congress, and this is the Congress Budget Office, now suggests that over the next 30 years, assuming zero recessions, no wars, no pandemics, none of that the debt to GDP ratio could actually balloon from 97% to an astonishing 172%. And yes, with the elections behind us, Congress is back in action, and we know history shows that they can't resist the urge to spend. So there are a few possible exceptions here that if Vivek Ramaswamy and Judy Shelton can actually help to maintain and steer Congress a little bit towards a balanced budget. But then again, they're just a couple of individuals that are trying to help out, and they don't have any political clout to speak of. So if they can't do that, then there's not a lot of options for us to feel that we can be really lowering this estimate for the future. Well, what changes are we making in light of these developments, especially with some of the increasing debt loads? Well, we are right now in what we call lead 3 stagflation. Now, this is the Alliance Wealth Economic Activity and Development Stage 3. Now, what we see here is that inflation is growing, and our estimates are that we will be growing in the inflation for a number of months. But we're going to have a stagnant economy. And what happens here is that we need to look to investments that are going to hold their own in this environment. And gold and also technology are great places to be in this kind of economic cycle. So yes, we can potentially have a nice year-end rally coming, and technology can be right there. But if we see inflation continuing to keep increase, gold will be one of those elements that needs to be a part of your investment in order to maintain a little bit of risk management. And as we approach year-end, some planning becomes very vital here. Now, I want to talk about one advanced strategy, the Backdoor Roth Conversion. Now, this is for you if you are over the limits to contribute to a Roth IRA. And if you're over the limits to contribute to a Roth IRA, you're over the limits to contribute to a traditional IRA that is deductible. So how this works is that we would make a non-deductible IRA contribution. Now you're sitting here and saying that if we're going to go into a traditional IRA, how does that help me? Because it's not going into the Roth IRA. Well, that's a part of the conversion process. You see, we can put money into the traditional IRA on a non-deductible basis. So we are not going to get a tax benefit for doing that. But then we can convert to a Roth IRA and put the money into the Roth IRA to grow tax-free. But here's the really important piece, that we need to figure out all of your IRAs together and establish your non-taxable and the taxable basis. Now, to do this, the non-taxable portion of the traditional IRAs, we must actually combine all of your IRAs together to establish your basis. And this is really important then, because we know how much could be subject to tax in the year you do the conversion and how much we don't have to pay tax on. But this can be even more beneficial to you if you actually do not have a traditional IRA, or if you can place all of your assets into a 401k plan. Now, what we can do then is help to sidestep some of the concerns over this taxable versus non-taxable income. And with our guidance, we can actually help you to convert your traditional IRA contributions that you've made into a Roth IRA and help for tax-free growth in the future, even if you're over the contribution limits. Now, with all these different implications here, I want to remind you of our second opinion service. Now, if you would like to have a second opinion, or another way to describe it is a stress test of your overall wealth plan, and also tax implications, especially if you're considering doing a backdoor Roth conversion, let us know, and we will conduct a discovery meeting to really assess where you're at today and then pinpoint any gaps that exist in your overall plan. So what I'd like you to do is click the link below and we can schedule time to set up your discovery meeting and talk about year-end planning and anything on your mind. Take care.